What's up everyone, welcome back to Finance on Fire. Today we're going to talk about how DeFi lending platforms compares against f.I.r.e. investment strategies. Let's go. If it's your first time on my channel, we talk all things FIRE, financial independence, retiring early, real estate, blockchain, anything to do with making money and retiring early. If you haven't done so already, push that subscribe button, like this video. I'll be doing some giveaways pretty soon. Just a note, I'm not a financial advisor. This is not financial advice, just some guy on YouTube documenting his journey. Today, we're going to talk about three things. Number one, how FIRE people invest to retire early. Number two, how DeFi lending is disrupting the traditional banking institutions right now and how possibly it can help us FIRE members to retire even earlier. And number three, we're going to do my favorite, a financial forecast, aka speculation on how DeFi lending and investing into blockchain technology can help us to reach that retirement goal. Let's go. Number one, how do FIRE members invest for early retirement? I did an extensive breakdown on this on a previous YouTube video. I'll put the link down below. It's quite simple. What you really first have to do is to find out what your retirement number is. Find out where you want to live, the lifestyle you want to have, how many kids you want, how many trips you want to go on, what type of stuff you want to have, and put that all into the expense category. Do you want to live in Southeast Asia? You want to move to Hawaii, Costa Rica? Do you want to stay here in America? It's all up to you. Whatever the yearly income is to sustain that lifestyle, you want to break it all down and multiply that number by 25. Let's say in the future you're okay living off of $40,000 a year. You take $40,000 a year times 25, that's a $1 million goal that you need to hit. Why multiply by 25? Very simple, because FIRE members follow a 4% safe withdrawal rate. This is based on a Trinity study that took a look at stocks historically from 1928 till today, and if you withdraw only 4%, you have a 95% chance of success of that money lasting for at least 30 years. The strategies that FIRE members use to invest is quite simple. All they do is buy index funds, mutual funds, and bonds. They're broadly diversified simply because they buy total market indexes or total international market indexes or total market bonds. Depending on where you're at your life, you could do a 60-40 allocation, 50-50 allocation, 100% stock allocation for some people. Historically, since the early 1900s, the total stock market index has returned on average about 6% a year. FIRE members invest all the time. When there's a dip, when there's a recession, anytime, all the time, they dollar cost average into the market during their FIRE wealth accumulation years. They know that historically the market goes down, but it always goes back up. Usually takes 1 to 2 years for a market to rebound, and the longest it's taken is about 2 to 5 years. As long as you have enough cash cushion, you're aware of this, and you're staying in the market, you will always be up. Number two, let's talk about DeFi lending versus traditional banking. What does DeFi really stand for? Simply, it stands for Decentralized Finance. Why and how is this possible, and what opportunities does it present today? Let's get into it. I'm not going to go into a deep dive. There's plenty of YouTubers that give you all the nitty-gritty technical aspects of it. I'm just going to give you a high-level overview today, and only my opinion, so I could be completely wrong. First off, let's look at American banking. You might go into Chase, Bank of America, Wells Fargo, whatever it is, and deposit your money. What you don't see behind the scenes is the banking institutions taking your money and then leveraging it out. They take that money and earn interest on it by providing collateralized personal loans, small business loans, and yes, real estate house mortgages. In return, they'll give you a small APY for your collateral. Thank you so much. They are going to give you probably in today's age, less than 2%, less than 1%, about a 0.5% average. If inflation is 2.9% and your bank's giving you 1% interest, you are losing money. Currently, if you wanted to leverage your assets in the same way as a bank, I don't believe that's possible. You could do it private loans, but you have to underwrite it your personal way, and that's pretty risky. This is a very interesting topic because as we speak today, DeFi lending platforms are blowing up. Companies like Aave, Compound Finance, Maker, BlockFi, you might have heard of these few. They're giving out crazy APYs. Let's hop into Aave and compare the current USD equivalent, USDC. This particular DeFi exchange is offering 11.85% on your USDC stablecoin. The reason APYs are so high is because all the lending is written into a smart contract. Similar to a bank, the smart contracts leverage your assets and provides loans. The difference is that this is all transparent out in the market and all encoded. Loans are all collateralized by a type of blockchain, cryptocurrency, or in this case, a USDC, let's say. I'm sure you have 100 questions. If you want further details on liquidity and how the exchanges provide that, there's a lot of other YouTubers that get deep into the details. What I really want to share is how this provides opportunity for little guys like you and myself. With a push of a finger, you could enter in your collateral, your assets into the smart contract and start leveraging them right away. All the underwriting and liquidation rules are baked in already. All you have to do is push a button. This completely takes out the middleman and gives you a higher return on your money. Right now, there's some pros and cons to lending your assets, your hard-earned money into these DeFi exchanges or even to a bank. In a traditional bank, you're FDIC insured, you're backed by an institution that's been there for many, many years, and it's something that relatively people believe in. When you go into DeFi exchanges, it's unregulated, uninsured. I think some have insurances, and it's new, which means that there's a lot of unknowns. It can also be said that there's a lot of setbacks with traditional banking. Just long wait times, low APRs, and antiquated systems. And now let's look at the positive sides of the DeFi exchanges. Right now, high interest for now before more people get in the market. Those interest rates will drop, but it will still be more than your traditional banking systems. Number two, you can also leverage the growth of the asset. The dollar doesn't grow, but if you put in Bitcoin or Ethereum as a collateral, that can grow along with your APY as well, compounding your APY. And number three, there's no credit checks. Everything's baked into your collateral. Everything's baked into your smart contract. If there's defaults, it's all written in there. Very interested to see how traditional banking is going to combat the rise in DeFi lending platforms like these. It's probably not in their best interest to bring down the blockchain technology itself. What we can see happening and what a lot of YouTubers say is going to happen is that a lot of banks are going to come out with their own stablecoin. You might see a Chase stablecoin, Wells Fargo stablecoin, Bank of America stablecoins. Hopefully these stablecoins will provide more transparency, unlike the 2008 mortgage crisis where they were just handing out ninja loans to anybody and everybody. Just my personal opinion, but more every day we are seeing blockchain adoption. I don't like to call it cryptocurrency because cryptocurrency was a bad tag onto the blockchain technology itself. It really brings down the value of the technology. If there's a tip of the iceberg, we are probably at the tip of blockchain in total, and probably of the internet overall. I think it's safe to say that technology itself, internet and blockchain, is something that we need to catch up to. The use cases is unmeasurable. It's something that we can't even grasp the power of yet. Historically, we have seen currency go from trading goods to peg to salt, to peg to gold, to peg to the dollar. In the future, will be pegged to digital currency. That could be true. Personally, I find more value in salt than all the above. Gold doesn't do anything for me. In my house, look around in your room. How much gold do you have in your room that you know of? Probably very, very little. In times of crisis and emergency, would I want gold? And the answer is no. I'd rather have cases of water and beans. And yes, I'd much rather have salt. However, the old guard really believes in gold, and that's why it has intrinsic value. The new guard coming in, I think is going to dismantle gold. Blockchain is much easier to send to your friends and family across the country and much easier to utilize. Can it be some other blockchain in the future? And it may well be, but who knows? They're able to make fake gold. They're able to make fake and counterfeit dollars. Will they be able to make fake and counterfeit Bitcoins? I mean, they're already doing it now. They have a lot of hard fork derivatives of it now. Personally, I believe the fundamental value of blockchain itself is what makes Bitcoin valuable. And as such, it should stick around for a pretty long time. Will quantum computing crack blockchain? And it well might. However, the ecosystem will most likely upgrade and utilize different blockchain technology to mitigate that risk later on. This is not financial advice. Do your own research, formulate your own opinions. Let me know what your thoughts are down below. Let's get into the last and fun part, which is a financial forecast of how DeFi will affect our f.I.r.e. journey. That's the most important part. All right, folks, let's use myself as a guinea pig and do some forecasting on a traditional versus DeFi exchange investments. Currently, after my 401k, Roth IRA, I'm doing about $800 a month into Fidelity, individual brokerage account with about 100% stock allocation. 80% domestic, 20% international. Let's put in the numbers and see what happens. $800 a month for 9 years left in my f.I.r.e. journey. Let's be generous and give it a 7% average return since I'm 100% in stocks. I don't have a drag of the bonds in my account. So let's calculate that, see what that would look like in about 9 years time. So about 114,000. Let's see how much I would have contributed over time. Total contributions, 86,000. Future valuation, 115,000, let's say. So about 30,000 in profit overall. We saw that Aave is giving 10% on a USDC stablecoin, but let's be conservative and go with the BlockFi number, which is they're doing about 8.5%, but let's just go with 8%, speculative to see what would happen if I put the same monthly contribution, not into any blockchain yet, just into a stablecoin and getting 8%. Let's see how much difference that would make me in 9 years. The results are in 119,000. So about 33, so maybe $3,000 more at the end of 9 years we would see if I just put it in to a stablecoin in a DeFi exchange platform, given that the interest rate won't fluctuate, right? And it's different comparison here. It's not really apples to apples because the DeFi platform exchange is I wouldn't say guarantee rate. It's like a floating adjustable rate of yield for your money. And then the Fidelity total stock market index is completely different. Is it going to be 7%? We might go down for like 3-4 years. Who knows? It might be 4% average. So a little bit different comparison. That's why speculation, but it's fun to just take a look. So we already saw what would happen if I put my $800 a month into a total stock market fund like f.i.r.e, right? Next, we can speculate what might happen if the USDC stablecoin, or maybe even Chase comes out with one, or Wells Fargo comes out with stablecoin that gives you an 8% return. Probably going to be less, but that would be $119,000 at the end of that 9 years. I did a fun look backwards just to compare what would happen if you bought Tesla versus Bitcoin. And funny enough, Tesla, if you invested into it for the last 5 years, Tesla would have won. I did that scenario based before the June summer explosion of Bitcoin in 2017 and then the meltdown till where we are now. And Tesla still comes out ahead. Now let's speculate what Bitcoin is going to reach at the end of my f.I.r.e. journey. My f.I.r.e. journey started in 2020, so 10 years out from that would be 2029. From now to 2029, there's going to be 2 more Bitcoin halvings. If you don't know what Bitcoin halving is, that simply means that every $210,000 blocks, or every 4 years around, there's going to be a mining reward reduction. What that means is that for mining Bitcoin, the miners will get half the rewards that they used to get before the halving. The next one coming up is 2024, and then after that, estimated 2028. Economically speaking, lower supply, demand gets higher, price goes up. Just like right now in America, we have a housing crisis. There's not enough housing for everybody, so higher demand, higher prices. If you do a quick research, you can see that in 2016 to 2020, Bitcoin more than doubled from 2016 to 2020. And in 2020, you can definitely see that if you're watching this in 2021, that Bitcoin more than doubled from what, 12,000, 20,000 to now it's at 50,000. We are 3 years away from the next halving. I'm sure Bitcoin's gonna go up. I don't know how much, but let's just say that it conservatively doubles by the next halving, 2024. And we'll play that same scenario through. That'll double again in 2028. Let's see what that means if I forecast out my $800 a month investment into Bitcoin for the next, 9 years. And considering Bitcoin halving, let's see where we might be at. Potentially, by the next halving, Bitcoin is going to be at 100,000 by 2024. If we take today's number, today is at 53,000 times 2, 100,000, let's say, by 2024. Now let's go to the next halving by 2028, 2029. We might see the halving double again from 100,000 to 200,000, let's say. Okay, so we speculatively said that Bitcoin grew to 200,000. Now we can reverse engineer what our yearly growth would be. Let's plug that into a calculator. That would translate to roughly 33% a year for 9 years straight. How did I get that number? Very simple. The profit was 150,000 from $50,000 today, where Bitcoin is. You divide that by the current price, that's a 300% growth, right? 300% growth divided by 9 years, that's 33% a year that Bitcoin will grow from now till 2028, 2029. Now that we know what's going to grow by speculatively a year, now we can put in our monthly contribution, same one we did for the total stock market index and same one we did for the DeFi stablecoin. And we multiply that by 9 years, 33% a year, calculate that, and bam. 349,000, 350,000 will be our end result. Let's see how that breaks down. I would have contributed $86,400 and it would have grown to $350,000. There you have it. I love speculating and torturing myself. 9-year forecast out, the f.I.r.e. journey would bring me to a conservative growth of 7% a year, $115,000 with my investments that I'm currently making right now. The reason I put DeFi in there is because I wanted to see how the DeFi lending platform exchanges compare to investing strategies of f.I.r.e. Because we're not investing with DeFi, we're just earning yield on our collateral, right? We're putting in money, we're getting 8% return, which is ridiculously high. Maybe if Charles Schwab's or Wells Fargo comes out with their own coin, I don't know, maybe to get more, who knows, 10%, maybe they're bigger institutional players, right? But let's just say 8% right now, that's probably gonna go lower, maybe even down to 6%. Some f.I.r.e. members would be happy with that. They don't have to be in the market, they just get standard return on the collateral. That's pretty good. Lastly, if we invested it into the Honey Badger Bitcoin, we would experience over a 300% gain. So from 115,000 in the total stock market, all the way up to $350,000. Not bad. Am I gonna do that? I don't know. You guys have to subscribe and stay tuned to see if that really happens. Which it might, because I'm maxing out my 401k, I'm maxing out my Roth IRA. Fidelity is just my individual brokerage. It well may happen, guys. We will see. And that's not considering that I put my Bitcoin up for collateral and I'm getting, I don't know, 3 to 6% interest on my Bitcoin, compounding that for 9 years as well. I posted this on my Instagram. I said, all right, traditional banking is your move. What are you guys gonna do next? Because if a small amount of people or a larger amount of people start moving their savings or investments into DeFi exchange lending platforms or DeFi banks, right? Can't really say DeFi banks because we're trying to disrupt the banking system. It's going to take away a lot of their business. And really it's up to the traditional banks to see what moves they're going to make next. We're at a very interesting time here, guys. I'm like sitting on the sideline, eating popcorn, waiting to see what's going to happen. Bitcoin does have the possibility of going up 7, maybe even 10x. It's at not even 1%. It's at 1% of gold. Gold's market cap is 10 to 11 trillion. Bitcoin's at 1 trillion around right now. Could it 10x? No one knows, guys. No one knows. Can DeFi lending platforms and blockchain accelerate your journey into FIRE, financial independence, retiring early? And the answer is undoubtedly it will influence it in some way or another. Positive, negative, I have no idea, but it will impact you in the next 9 years. It's already happening now. We're at the crust. We're at the tip of the iceberg. There's so much that's going to be happening. Follow along as I document this because I don't know what's going to happen. We can only look back on this 20 years from now and say, hey, I wish we could have done that. I wish I would invest earlier, or I wish I could have avoided that, right? You really have to formulate your own plan and understand your risk, balance, and tolerance levels. How diversified are you? Personally, I believe in real estate way more than gold, right? So for me, if blockchain didn't exist, I would be more into real estate, which I'm planning to do this year. Now that blockchain's in the conversation, blockchain can actually play a part of real estate. 10, 20 people can go into a speculative investment or a syndication, and it could be contracted out, hopefully higher returns than the syndicate I'm currently in. Who knows? The current syndicate that I'm in has good returns. However, I see blockchain, they're already entering that space, and Tezos is a company that's already doing that. I need to look more into Tezos. Guys, overall, my head is spinning. There's so much opportunity, so much regulation that's going to come, so much that's going to just inundate us with information. But you know what? Subscribe, follow along. I'm going to unpack and unfold as much as I can and to just have a conversation about what's going on because there's a lot going on. Thank you guys so much for following my journey. Subscribe and like if you haven't done so already. Please share this with a friend that you think this information will help. Let me know what you guys want to see next. I will catch you guys on the next video. Stay fire, stay healthy. Catch you in the next one.